Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Thanks for joining in for this weekend video review. This is part one of the weekend review. Today is March 11, 2018, and it's 11 p.m. EST time in Toronto. This video is part of the FibStalker Analysis and Trading Service. So, as usual, I ask you to read and accept the disclaimer. Past performance is not indicative of future results. Trading Forex carries a high level of risk and may not be suitable for all investors. If you have not accepted the read and accepted the disclaimer yet, please read it carefully before proceeding. All right. So let's dive into this market. We'll start from the SP 500. The SP 500 is now continuing higher after the non-farm payroll last Friday, and what we're seeing here is a continuation higher into this 2850 level, which is the first target of the 50% from lows to recent highs here that has traded. When we look at the 4-hour time frame, we also have an inner measure move here that has held, and as you can see, the market went into that first target. So if this market comes back, there is a possibility at the beginning of the week for a throwback here into previous highs, and that would also be the next extension long to 2769. Okay, so that would be the area to look for if the market comes back and trades that level. Dollar index, we are still working out this reversal, and there is still no confirmation this reversal will be completed here. What we know and what we have from the charts here, we had a 50% trading here, as you will remember last week. This level, the 89.10, has held and pushed price higher. And when we look at the last few days here on the 4-hour time frame, we can see that opposing measure move, the bulls from the highs here are not there, we're not willing to maintain this price with below the 61.8% level. Okay, so what we can and we have to consider here is that the bulls are in control, and they're in control on the daily and also on the 4 hours. So we're gonna see whether this market, if it continues lower, is gonna hold the 89.40. That would be a confirmation that the bulls are in control. If the market continues lower, there's going to be another retest of 89.10. Okay, so if this is a turning point, it's as usual, it requires time because we have dump money trying to sell this move, because what they see the move lower. Okay, so we will see whether algos here step in again if we get to 89.40 area. Gold has been anticipating and moving accordingly with that correction that we had in the dollar index last week. And so this market moved lower, traded 1332, and we have nothing has changed from our last review. We have first target below here at 1287. Okay, so nothing has changed here. If this market continues higher, we'll need to see if the 50% here holds. That has traded already on Friday, 1324, and if this is retested, we should see this holding if the dollar index is going to continue higher. Okay, so that's what we would likely see here if the dollar index continues in its move. The move in the in silver has been lateral below resistance here, and the resistance is the level that we see here at the area 16, 17, 17 level. That's what we see there. And this market here has been at this level has been holding price, which has moved laterally here. So this is a lateral move. There's nothing to really, no edge here. And so we're waiting to see whether this market continues lower into the first target of that measure move on the daily. The measure move has a target 1580, as we mentioned last week as well. Otherwise the 17 is going to be retested again. Let's start from the major now. Australian dollar, US dollar is showing strength here, and at this point, because the first target of that 50% short that has traded, you remember here, this has traded the 79.46 has traded a few weeks ago, and this has actually pushed price lower into previous lows here, but not low enough to meet that first target at 76.70 area. So that means that the 79.50 could be retested here, and on the 4-hour and daily we have the setup, the 50% long that has traded on Thursday, and it's continuing higher here with the first target hit. We are seeing a little bit of profit taking there, and the market could continue higher into 79.20 area, which is the second target. Okay, next is the euro dollar here, and the euro here is holding a 50%, as we can see here. The 50% is the 123 level here, and that has traded on Friday's holding price, and this would in a way go against the scenario of a dollar turning. This would go more of because we have previous highs here as first target. If this moves continues, then the dollar index turning is off the table. Now you have to consider that basically we have had since the beginning of the year, a lateral market, and these markets are not good for trading, because at least not on the daily time frame, where very few opportunities happen. Okay, so you need always to remember that, because we need to see continued moves in order to be profitable in the market. We need trends. Okay, so this is not happening at the moment. Eventually this situation will change, so we need patience here in some of these markets, and you're going to see also whether the dollar index is going to reverse or not, because that could create a brand new trending environments for all the majors. So we need to be patient and follow this sequence of measured moves here to see what is possible what is possible here in this market. Pound, you remember that it has traded a 50% at 39.29 from a previous swing high here. The market seems to want to retest the level again, and when we look at the bears though, they were not capable of holding this price. So this is a man for murder pattern. It's one of the FibStalker patterns. So our anticipation is that if the market gets back to 39.30 here, that level should actually hold, and because bulls were not holding this price before. Okay, so we could see an M here, 39.30 trading again, and that's something that could be a good opportunity for this week if the market continues to move higher. US dollar Canadian dollar is in a correction mode here, and there was a very important development right at the open here. When we look at the daily and we look at the sequence of measured move that we had, you remember that the 124.64 has traded, bringing price into the first and second target, and now the next measured move has failed. Okay, so this is a confirmation of shorts, and obviously it's not conducive to scenario of the dollar reversing. Now what we could see in this market is a full 50% retrace into 126.20, and we also have to see whether that level is going to hold if it trades, because this is a range now. Okay, so remember that on the larger time frame here, we look at the weekly, the 50% short has traded now. You remember that in the past weeks and months here, I've mentioned that this level, the 2930, has never really traded. Now that level has traded. So this market is really in between a long from 120.40 here and a short. This area here to this area here. For some reason I cannot see the cursor here. So now this market can trade into the 50% from lows to highs, and this 129.30 has traded. So no more excuses for this market. Technically it has failed these levels, and if he comes back now, this could be opportunity to sell. On a smaller time frame, it could be a 50% retrace if there is a rally. It could even be an extension here, because this market has traded very strongly on the downside. It's a very technical market, and at this point any retraces, even a full 50% retrace from highs to lows, becomes a very good opportunity to enter shorts here, because basically, and from whatever low this would come, 129.01, if this was the actual low here. Okay, so that would be, that 50% would be a great opportunity for a short in this market. Okay, so that's something to keep in mind. US dollar, Swiss franc, we keep seeing, we kept seeing a strength here in this market. Now there are several levels here that we have to look at, and the first one I'm looking for here is an extension that has failed. All right, and I'm talking about the lows to lows here, and we use this low here because this market has traded to that level. The first target was not hit. This level is now has now failed. There's also a 50% here that has not traded yet, and we will see whether that is going to trade or not. Now the actual failure was that I showed you in the daily time frame was from this low to the new low, but the reality is that we should be probably using let me see, sorry, so that's the right trace to take here. Okay, it's the lows to lows, and that has failed, no doubt about it. Okay, so we need to see if this market actually comes back the 50%. Now it's a valid level. Okay, and we will see whether the market comes back to that level or not. Now when we look at the 50 of the 4 hour here, there is a 50% short that is trading at the moment. Okay, that's lows to highs to lows here at the open. This has retested at the end of Friday and tested twice at the open here, so there is a short setup. On the daily there is also a notable anchor with an extension long. If the market holds this level, we're gonna see a continuation higher. Okay, if that level pierces, it's very possible to see 93.16. So we'll need to see how the dollar index trades as well. The dollar Japanese yen has been, has seen strength last week, and it opened strongly today, and then it's now since come back from the highs. Remember that we broke the 50% from the most recent swing, and also from the previous swing here. And so, when we look at the weekly and at the daily, I mean, the daily is still bullish here, despite the move we're seeing now, this corrective move we're seeing. So we're going to look at the 50% on the 4 hour and daily. The market corrects even deeper here, that is going to be this 50%. There is also a 4-hour extension here that is responsible for the current bounce from highs to highs. Sorry, no, that has not traded yet. Okay, so it might come into play. Overall, still very iffy markets here, and again, that's because they're reversing, and when markets are lateral like this, it's a bit more difficult to to make money in the market. So you have to be more careful. I'm very careful at this stage, and there is no need to rush and try to try to force trades. The New Zealand dollar daily here has traded the extension long again. Remember, from highs to highs, that participation was already identified here at the beginning of February. Pricing to previous highs, came to trade again. Second test, a dangerous test, but the second test has held. Then what we saw last week, we saw a full 50% trade here, which you can see it's visible also on the 4-hour time frame and on the daily as well, and that has targets above. Okay, so this is a range, so this level has held, so it's very probable for this price to reach now previous size. Last week the 73.06 has traded and was responsible for pushing price into 4-hour longs here, or daily longs, and since daily longs have been in play and in control, and we're seeing a swing higher highs here. So when we look at the first target of this long 50%, it actually is just above the 61% level. So if the current algos that are in control here are able to keep pushing this price into the first target, then this area of resistance is gone, and we could easily see this market continuing higher into previous highs. Okay, so it's a transitional period of several weeks here, basically since the beginning of the year, if not, and we have to be patient. That's very, very important. US dollars, Singapore dollar here. I use this as a proxy of the dollar, and as you can see here, it's now showing strength, and it has continued lower than move on Friday at the beginning of the week here. So that's certainly not looking good for a dollar reversal. You remember that this area here, the 131.72 to the 131.33, has been holding. We don't know whether that's going to hold still. But this market is in a lateral move, so until the lateral move is resolved, and sometimes we put trend line just to remember that I don't use trend lines. I only use them to identify this pattern, which is really FibStalker pattern here, sideways, and you can explain with measure moves as well. So we're gonna see whether this market holds when the bottom of the triangle here is tested, and we'll see whether this market is going to reverse or just going to continue lower. All right, so this is it for this first part. In the second part, I'm going to review all the other forex pairs, including the main and the other forex pairs. Thank you very much, and have a great trading week. Bye bye now.